But first, let's take a look at Spotify. Shares are getting really hammered in the afternoon trading after they reported earnings yesterday. So let's talk a little bit more about what's going on with that company with Lou Basenese. He's Disruptive Tech Research founder and chief analyst, to talk a little bit more about what's going on in the space. Lou, great to have you on the program. It's interesting to see the numbers really clock in here when we talk about their subscribers. That appears to be the big issue. A record 406 million monthly active users, but we can see the street's sour reaction. Any initial thoughts on the report yesterday?
Yeah, I mean, I think as investors, it's time to tune out and really wait for the growth to come back. I mean, you highlighted it. They're at about 406 million monthly active users. This, for whatever reason, in the platform world, whether it's social media, streaming services, becomes a roadblock. It's a temporary plateau that some companies just can't get through. Snapchat has struggled to get north of 400 million. And, I'd say Spotify is stuck in this trap right now, stuck in that mud. And the street's really, I wouldn't say they're overreacting even. So if you look at the premium subscription growth numbers, it's actually decelerating significantly. So quarter over quarter, it's only been about a 1.7% growth that they're projecting right now moving forward. That's coming after about a 5% growth. So you're seeing a steep decline in user growth. And it begs the question, is Spotify topped out on growth? And that is why I think everyone's hitting the sell button to find out, later on. It's better to exit now and come back when the growth returns.
Lou, it's Akiko here. I mean, even with that said, I wonder how much of this is a pull forward that we saw in the previous quarter. They had really strong numbers back then. So is this just a matter of setting expectations?
I would agree with you up until the conference call, because if we look, they do a lot of year-end marketing to pull users in at the end of the year. They've tried to say on the conference call that this was a seasonal slowdown, that this will prove itself out over the years. But here's the problem. Management is now cutting back the guidance that they're providing. They revealed on the call they're not going to provide annual guidance anymore. And those quarterly metrics, instead of giving a range, they're just going to provide a single number. We've seen this traditionally happen on Wall Street, especially with tech companies. When management pulls back the transparency, investors, they hit the bricks. They go somewhere else until they start getting some clarity on those trends. I mean, we saw it happen with Apple before. We've seen it happen with Facebook and various other platforms, where if you don't give investors the information that they can use to gauge where growth is going to come in, they're going to move on until they can get some confidence there again. And I don't think anyone has confidence in the growth right now.
Lou, I want to switch to the big headlines around Spotify that have happened over the past few weeks. Obviously, over the Joe Rogan controversy, we don't need to break down exactly what's going on there. But do you think that those headlines will weigh on the subscriber numbers and the revenue in the quarters to come? And is that perhaps a reason why the stock is also experiencing such a bad day today?
I'm going to be the contrarian view here. I don't think it matters at all. I mean, honestly, I'm a Spotify premium subscriber. I'm not thinking about canceling my subscription because of Joe Rogan or Neil Young not being on there. Hey, he's gone. But there's plenty of other content providers that are on there, and content is always king. So for subscribers that are actively paying the premium subscription, it's not a matter of one person leaving the platform that's going to make them migrate elsewhere. I think it's the collective. And, look, even if you band together here, all these artists and creators that are removing their content, there is still just a myriad of other content that we come to consume on Spotify, and I just don't think that's going to change at the price points. Now, if it was a super expensive subscription, maybe that would influence behavior on the user base. But we've seen it happen before with Netflix, with Dave Chappelle. We've seen with all these platforms, the controversies around content really don't put a dent in their user numbers.
Lou, from a competitive standpoint, which platform poses the biggest threat to Spotify? And if we're talking about not having a catalyst there to get those growth numbers back, is it going to come down to content on the podcast side or the music side?
Great question. So, I mean, if we look at market share numbers, Apple Music is obviously the next in line. So Spotify has, I believe, at the latest numbers, 31% market share. Apple's at about 15%. Obviously, I would argue that Apple has much more ability and a user base that they can leverage to grow consistently over time. So I think that's probably the biggest competitive threat. And in terms of different mixed medias, I think it's podcast is key for two reasons. One, you're seeing a lot more content being created there. There's very faithful followings in podcasts. But then more importantly, that generates the advertising revenue inventory. And we've seen it this quarter with Spotify. 15% of revenue came from advertising revenue. So that's going to be a key driver. It's almost the key metric that you have to watch moving forward as an investor. How much can they ramp up that advertising revenue? Because if user base flatlines and just kind of just stays steady, it's going to be really key for growth in terms of growing earnings and consistent profitability for them to generate a lot of ad revenue.
All right, well, we'll have to see what their other quarters bear in the future. Lou Basenese, Disruptive Tech Research Founder and Chief Analyst, thanks so much for stopping by this afternoon.